Right. Good morning to you all. So, can you hear? Yes. Can you hear? Can you see? Are you okay? Can you hear? Right. Right. Thanks. Right. So, if you can remember, we have discussed one before last note that right. So, vouching and verification, and again that audit evidence. So, and finally, we have discussed one question on vouching and verification. So, right. So this is a mini case study we have discussed on vouching and verification and regarding the audit evidence. So I ask you to work on this and come up with that your right. So this is the case study we have discussed last week. Just discuss. So I asked you to come up with the answer. So any comments? Basically, what is asking about that question is that identify the importance of inventory count in this situation and what are the audit procedures you want to follow in case of inventory count attendance, and then state the procedures which should be taken in relation to the cutoff of the final audit. So what do you mean by cutoff? So make sure that we have recorded all the inventories regarding the in relevant period, right, compliant with the time period. So then again list the audit procedures that would carry out on the valuation of inventory for final audit. So as we discussed, so inventory is very important, right, for a especially for a manufacturing business. So with that we have made the discussion on how to make the valuations and make sure the existence and the conditions of inventories by participating and by attending for the physical stock verifications done by the client, right. So we made the observations and come up with our audit evidences to make sure that the stocks or the inventories are having the existence and to make sure the conditions of those inventories, right. That's a the basic discussion we have made in our discussion, right. So then what's your answer on this, right? So I have already uploaded to the LMS, so that comprehensive answer, but you can get the the basic understanding. So what's the importance of inventory count on this situation? So yes, as we discussed, you want to check the existence and the completeness of those inventories and make sure that they will maintain the whatever the inventory records. So that is basically we discuss as the perpetual inventory records. So as you know that perpetual inventory records include bin cards, stock ledgers, right. So those documents are very much important, including GRNs and GINs, right. Those documents are very important to maintain proper set of records on inventory. So inventory is very important and again very much vulnerable for the frauds and errors. Why? Again very much highly moving item is inventory is considered as highly moving item in a business. So purchasers and user, I mean that so that will be used for the production process, So therefore you want to consider, you want to focus more on that, right? That's why you should have proper set of documents, that is so called perpetual inventory records, right? So when you plan in for attendance for the inventory stock taking, so you should have a lot of the informations, basically that you should know the business, the nature of the business, possible that obsolescence. Then again, so what are the items available in the inventories, and what are the locations those inventories are stored, right? So you should make sure that you should have the idea, understanding on those areas as well. So you will find some of the issues, so then you have to consider those matters, staff issues and all that. So how to rectify those things, everything is included in the your answer. You can refer to that, right? Okay. So valuation of inventory, very simple, and very important. So very simply, what you have to make sure that as per LKS2, so you want to make sure the cost and NRV whichever is lower, right? So NRV again you can consider with what? Subsequent selling prices. That is, after the financial period, that is, let's say 31st March. So then you can, look into the April month sales. So then consider whether the net realizable value is lower than the cost or not. That is what you want to look into. So with that, you can make sure the cost and the NRV, whichever is lower, you can consider as the stock valuation. But again, you know that with the quantity, you should make sure the value then get the total value for the inventory. So you can look into those areas. So then the comprehensive answer is given here, so you can refer to that. But in your questions, so what is expected is you have to focus, you have to address the main aspects of those concerns or those factors, so which is included in your case study. And apart from that, so what you are logically develop in any answer which is applicable for the case study, so then given case study in the paper, so that can be acceptable. So therefore there is no hard and fast rule this should be the exact answer, no. So there may be some other factors so which are applicable for the case, for the answer, so then that can be incorporated, no issue with that. So based on the facts you will be given the marks. Make sure that that is a logical answer, logical comment, so then that will be acceptable, right? So that's how you want to develop your answers in the final exam, right? So this is something about what we have discussed in the last day. With that, we can move to the today's discussion. Any comments? Are you okay? The answer is uploaded to the LMS, so you can refer to that. Any comments? Are you okay? Are you clear? Right, please give your support. So nobody is here, only the computers are here, so no that physical attendance here. So therefore, so I totally depend on the students, those who are in online, right? So therefore your support is very much important to continue the lecture. Otherwise it's really difficult to do the lecturing for the computers, right? So then only I can understand the importance of the students which are physically attending, right? So it's really difficult to continue the lecture without your support. Therefore I kindly request you, I mean that fullest support online, so to continue the lecture in a that effective way. Just talking and going there, I mean it's not worthwhile. What is important is to have a close interaction. So if you have any comments, you can ask. So any clarifications, you can type, or you can that you can talk even. So right, hope that you will give the fullest support in your through your that online facility. Right. So are you working on that assignment? Yes. Are you working on your assignment? So anyway, that your I mean that assignment presentation will be on 14th week. So this is, I mean, basically I will be temporary stop the, I mean, my discussions or the lectures here. So now again, next 5 lectures will be taken by Mr. Sanjay Bandara, who is visiting faculty. Then he will be taking 5 lectures regarding code of ethics, and then audit reports. Then audit reports basically with the, I mean, modifications and the original audit report, and again new audit report will be come into. So even that will be discussed by himself. And other assurance engagements, if you can remember, I just discussed different types of assurance engagements of the related services, like review, right? So then agreed upon procedures, then compilation, right? So likewise you will discuss some of the assurance other related services or the other assurance engagements with him. So then some of the perspectives of auditing and accounting environment as the auditors, how do you deal with the electronic or that accounting systems and auditing systems. So as we discussed, that most of the companies are having that accounting softwares. So, and again, which is somewhat now that not that much costly. So even very simply we can install that, and we can manage the accounting softwares like MyOb, like some of the other softwares. So even frequently that companies are using even medium scale and small scale businesses, because then that will give more information, and that will be easy to handle. So it won't take much time. So therefore companies are using that. So under that type of situation, so under that type of conditions, how do you make the audits? So your audit procedures are the same, but only thing is you want to interact with the softwares, and some of the IT controls are important. Otherwise somebody can put the entries. So therefore make sure, I mean, you have to have understanding on how to make the audits, how to do the audits in audit account, I mean that IT environment for accounting and auditing. And again for the auditors, we will have the audit softwares, but again it's nothing else. So it's supporting to do the audit properly. So only thing is you have that electronic form softwares. So most probably you will have that hard, instead of hard copies you will have the e-copies. That's all. That's the only thing, but the procedures and everything is the same, right? So that part will be discussed by Mr. Sanjay Bandar, and new trends in auditing. So anyway, I just discussed what is forensic accounting and all that, but we will have a comprehensive discussion on that at the end, so which will be very much important for you all. So and again it will be very much interesting. So that will be discussed later. So this is the area that the Mr. Sanjay Bandar will be discussing with you. So after that I will come back. So once he complete that his 5 lectures, so with your assignments and presentations, and then again with your final wrap-up sessions, revisions, and some of the outstanding matters to be cleared. So that's the whole plan for next. This is, I think, 7th week. This is the whole plan for that audit and assurance subject. So if you have any comments, so you can make your comments, and you have the presentations as we discussed on 14th week. So then you may have some time to make your good presentations, to develop your proper presentations, quality presentations. So take your time and do a good work, so then you will be getting more marks, right? and again you will be getting 20 marks for your quiz. So during the study leave period, that will be, you will be able to work on that. So this is the whole plan. I have already discussed this just to recall what is our plan. So then make sure that you are compliant with that. You can plan in advance, so how to tackle your that personal commitments and other things, and your master program. So any comments before starting our today's discussion on going concern? Are you okay? Any clearance? So all the assignment guidelines have been uploaded so to the LMS. I think you have already gone through with that. So do you have any comments? No? Are you okay? Yes? Right, okay. Okay, thanks. Right. With that, we'll move on to that today's discussion on going concern. That is SLS 570 going concern. Right? So what is going concern? Can I get your comment? What is going concern? What is going concern? Please type your answer. What is going concern? Yes. Company will exist into future period. Okay. So one answer is company will exist into future period. Yes. Okay. Any other comments? Okay. Business activities are operating for the foreseeable future. Okay. Right. Right. You will have the basic understanding on. So what is going concern? So yes, as you pointed out, so we want to make sure whether the business is having the capacity or the ability to continue as a business for the foreseeable future, right? So then this is what? This is an assumption. So if you can remember LKS1, right? In LKS1, so when the management is preparing the financial statements, they want to make the basic assumption. What is that? The business is having a going concern. By keeping that standard, or by keeping that basic assumption, the management will prepare the financial statements, right? So therefore the management is making the assumption that the business is continuing for the foreseeable future. By keeping that basic assumption, so they will prepare the financial statements, and they make the fair presentation on those financial statements. Yes or no? Yes. So therefore it is very clear that this is the assumption made by the management. Why? Why do the management should make this assumption? What's the reason? Again, can you type the reason to make the assumption on going concern? Why? Yes. Nobody? So why do you want such assumption? I already discussed some points of this the assumption or the going concern assumption or that concept. Yes. Why? For sustainability? Business activities are operating for foreseeable future. Yes, okay. That is regarding the going concern. Sustainability. Okay, it's a broader concept. Sustainability. So you understand the simple point that if there is no going concern for the business in the financial statements, can you find current liabilities and non-current liabilities, current assets and non-current assets? Can you find such classification? Yes or no? You can't. If there is yes, if there is no going concern, how do you find the difference between current and non-current? Right? What is that? This is a fundamental classification. Basic classification, current and non-current. So if it is coming in within 12 months period, convert into the liquidity. So basically we consider as current assets or current liabilities. So non-current, other way around, it is more than 12 months. So therefore, to have the basic, that classification, you should have the going concern. Otherwise, you can't do that. Right? So another point. If the business is not having a going concern, if the business is not having a going concern, do you think that your customers are paying to you? Your debtors are paying to you? The customers came to know that your business will be closed by 31st December today. Now you have the outstanding amount from your customers, 5 million. Do you believe that those that customers or the debtors are paying to you 5 million? Yes or no? Do they pay to settle their dues? So the practical the situation is they don't pay. Why? They are thinking that so no more business from tomorrow onwards, so then no employees from that particular business to raise the funds from us, so no more business, so therefore we can just ignore that. So I mean some customers are paying, but most of the customers are not paying because no more business is there. They will look into some of the other suppliers because they understand that let's say another 1 month's time that business is not surviving, no employees are working over there, so therefore we can just avoid from that payment. That's the perspective they may have, right? But again, for the commitments, for your obligations, you have to pay or not? You have to pay. Why? So again, most of the non-current liabilities, interest bearing borrowings are mortgage assets. So therefore you have to redeem those things, you have to make the payments on those dues. So do you believe that I am taking the consequences of the impairment of going concern? Do you think that if you supposed to close down your business, do you think that you can sell your assets on the prices are in the accounts or the statement of financial positions on the cost which are shown in the statement of financial position? Do you believe that can you sell? Never. Practically never. Why? Nobody is going to buy because you are winding up the business. Then they are asking the lower prices from you. They are bargaining. They are bargaining to the lower prices. because you are winding up the business. Then they know that, so whatever the price they will sell, I mean you will sell, because they can do nothing. So they have the bargaining power. Then they will bargain. Therefore, can you rely on the valuation made in your statement of financial position on PPE, property, plant and equipment? Right? So likewise, the business is not having a going concern. You will find fundamental issues on valuation and presentation and existence, classification and everything. Your assertions will be impaired. That will be invalid. Right? So therefore, first, that's why it is the basic assumption or the underlying assumption when you are preparing the financial statements. So you should make sure whether that business is having a going concern or not. It's a management responsibility to make that assumption when they are preparing and making the fair presentation on those financial statements. It's a responsibility of the management, right? So it's a very fundamental concept and the assumption they want to make. Clear? Right? Now understand the importance of the going concern. Yes? Any more comments? Yes? Right. So then what's the role of the auditor in case of going concern? Now this assumption will be made by the management. So they will make the assumption that we have a going concern. By keeping that going concern assumption in our mind, by making that assumption, so we will prepare the financial statements. So that is the assessment or the assumption made by the management. What's the role of the auditor in case of going concern? Keep in mind, the auditor should make sure, right? Auditor should make sure what? The appropriateness of the going concern assumption made by the management. The appropriateness of the assumption made by the management. To what extent the assumption made by the management is appropriate for this situation, for this particular company. How do you check that? The appropriateness. You can check the appropriateness by collecting the sufficient and appropriate audit evidences. Right? Sufficient and appropriate audit evidences. You should collect sufficient and appropriate audit evidences to make sure that this business is having the going concern or not. Because if you don't do so, you don't know whether this business is having a going concern or not. Right? If there is a going concern, then no issue. But if there is no going concern, your opinion will be totally wrong. Your opinion will be totally inappropriate. It's a total mess. It is, that, impairment of your professional duties. Don't allow that to happen because it's a fundamental error. So therefore, the consequences are again, that consequences of that issue is very much critical. Therefore, it is fundamental to the auditor even to check the appropriateness of the going concern assumption made by the management. How do you check? You should collect the audit evidences. What are the audit evidences you want to consider to make sure that going concern, to check the appropriateness of the going concern assumption made by the management, right? So you want to understand the nature of the business. Are there any legal implications? We discussed in the last week, right? Are there any legal implications? Can you renew the license if it is applicable for next period, for next year, for next 5 years? For some business, they don't get the license due to the different reasons. Maybe the environmental issues, maybe legal implications in the government, or whatever the reason. So anyway, what is important for the auditor is whether that business is having the going concern or not. That is legal aspect we want to consider, right? Consider those while you are collecting the audit evidences. So what about the license? If they required, make sure that those are, that up to the level, so that will be approved. So no issue with those things. So make sure those aspects. And again, customer complaints, customer, not only customers, so whatever the stakeholders cases filed against the company, any implication to the going concern on the business. Right? You want to look into those things. Because there are some businesses, they don't, they don't comply with the laws and regulations, then the governments or whatever the legal authorities cease their operations. Right? If you can remember a simple example for Jana Shakti. A few years back, so temporarily their business operations were ceased by the Insurance Board of Sri Lanka due to some of the incompliances. So it is for a temporary period, but sometimes if they don't comply with those things, that will be continuing for the future. So that there are some businesses ceased their operations, right? So some of that, the TV channels cease the operation. I don't know what are the reasons. So that is, not financial reasons, but because of some of the other legal reasons that have been ceased their operations. Then no continuity for the business. You have to collect those audit evidences regarding those matters. So that is broader perspective to make sure the continuity of the business. So apart from that, you can collect that interim financial statements. So that is what subsequent to the audited financial period. So you can look into the financial statements of those that particular company. So and make sure that business is continuing for the future, right? For a healthy business, for a financially healthy business, and if they are compliant with those legal requirements, they don't find an issue. Risk is very less on going concern. But for a business which are having some of the issues, legal implications, legal issues, and losses of the business, they are more vulnerable for the discontinuation of their business operations. Right? So that can happen. So therefore, first you want to look into the business and how does it goes. So you can look into the background information, history, and so whether they are having any legal issues or not. So financially they are viable, the size of the business, and again that's also important. So normal, that understanding is, if it is a large scale business, it is very much that unlikely to cease their operations because there's a firm size is higher. So they even some subsidiaries or some that branches are not going well, but business will be going well because of the size of the business. So the others are working well. So therefore the size of the business as well, size of the business also very important. So therefore it's up to the auditor to make sure, right, the appropriateness of the assumption made by the management by collecting the audit evidences. You can look into the board minutes, so whatever their decisions and all that, right? So while you are collecting the audit evidences, so standard tells you 3 aspects you want to look into. So you can look into some of the indicators to make sure the going concern, right? So there are 3 indications in case of to make sure, I mean to make a reasonable doubt in the auditor's mind, specifying that business is not having a going concern. It's a doubt. We can't tell, specifically as the auditors, we can't tell this business have to be stopped from this date. No. This is only a reasonable doubt in the mind, I mean developed by the auditor because of the information they have gathered, right? So as I pointed out, so there are 3 types of indications, right? So you can come across while you are performing the audit. One is financial indicators, right? Financial indicators. So let's say some of the examples, right? So if the business is continuing with the losses for a reasonable period of time, for a continuing period of time, right? So if the business is continuing with the losses, what can happen? Is it more vulnerable for the going concern, I mean that impairment of the going concern or not? Last 5 years losses, continuously they incur the losses. So what's the idea on that? So it's not worthwhile to do the business. So can you bear the loss for longer period of time? Do they have any recoveries on that? So then if the company is incurring losses for the longer period of time, so it creates a doubt in the mind of the auditor. So this business is not continuing for a foreseeable future. It's a reasonable doubt. It's a one indication, continuous losses, right? So negative net assets. As a result of the continuous losses, the business can end up with the negative equity, negative net assets. Can it happen or not? Can it happen? Yes, can happen. How? Total stated capital is, let's say, 1 million. I just give a simple example. Total stated capital is 1 million. Retained earnings 2 million loss. What does it mean? Then what would be the negative assets? So net assets. What would be the net assets? 1 million minus negative 1 million. Right? That can be financed through what? The loans, interest bearing borrowings, or any other liabilities. You will find businesses like that. So even there are some PLCs which are in that type of situations because of the continuous losses, accumulated losses for the last couple of years. So that is one reason, that is one indication for the auditor to have a reasonable doubt in the mind of the ongoing concern. To have a reasonable doubt on the going concern assumption made by the management. Then you should be very much alert on that. You should be very much careful on that matter. You have to look into the other perspectives as well. So then what is their strategies? What are their strategies to reduce uh, the loss? Or do they have any plan? Is it practicable? Is it realistic? Right? Do they have the forecasting on cash flows, forecasting on their profits and revenues, new businesses, new ventures, any other strategies to come up with this to resolve these the issues? They want to look into that, right? So that is that as far as concerns financial indications, the auditor should look into. There are some of the other indications. This is not a comprehensive list, but these are very important points. Some of the loans are getting default. The company is not paying those loans on time. What can happen? Then they don't give the loans again for that particular business, right? Things are getting worse. These are financial indicators. Your non-current assets are financed through current current liability. So that current funds in the business. So it's a matter of that working capital management issue. So we know that normally that the non-current assets should be financed through non-current liabilities, but that has happened in the other way around due to the lack of funds. So these are some of the financial indicators, right? Likewise, you can find a lot of indicators: working capital management issues, continuous working capital management issues, huge loan commitments, making issues to the continuity of the business. I mean, not for a particular year. So if it is the situation is continuing for the foreseeable future, so that will be the situation. Right? Still I don't come up with the PowerPoint presentation, so I just discuss. So you can go through with that and you can get everything. But that is same thing what I am discussing. Right? So far I discussed the financial indicators. The other one is operating indicators. Apart from financial indicators, you will find some of the operating indicators. So one of the operating indicator is lots of key management personnel, no replacements. Your CEO is resigning from the business suddenly. Then the situation is getting worse, no replacement. Then some of the general manager is working on that. So the sum of the labor turnover is getting higher. Those are operating indicators, because that employees are going out from the business. If they are waiting here, so they are in trouble. Then before coming the trouble, so they will just skip. They will go somewhere else. Right? These are operating indicators. So you will find only few customers, or let's say 3 customers you have, or the supply, buyers, your buyers, customers. So then they are going away from you. What will happen? Exactly, this is the situation happened for the small and medium scale garments in our context. So I know that some of the garment practice, they have only 2 buyers or 3 buyers. Out of that those 3 buyers, so one is getting the goods from that particular garment 80%, 70%. It means if that customer is rejecting your goods, there is no survival for your business. There is no survival for your business. Yes or no? This is the situation. No survival for your business. Major customers are losing from you. They are going somewhere else. Emergence of your competitors in different products, in different modes, low cost, high quality, high technology. You will be going out from the market. There will be a threat for your survival. So these are some of the operating indicators where the auditor should look into. Then the other indicators, as we discussed, other indicators like legal implications, renewal of license issues are there in case of renewing the license. Central environmental authority making the cases against the company regarding environmental issues, right? Some of the employees are making the issues, union, trade union actions. So that will be a reason, that some of the BOI, yes, foreign investments made by some of the companies, due to the labor issues, they went out from our country. They made the investments, they do the business for few years, so they will consider about the labor matters and all that, but again finally if the things are getting worse, they just go away. For some of the companies that has happened, due to the labor issues, they just went out from the business. Right? So you have to look into the other indicators as well. So this is what you want to look into while you are doing the audit, and by collecting the audit evidences, so you should make sure the appropriateness of the going concern assumption made by the management. This is all about the SLUS 570 going concern. Any comments? Right? Clear? So we are referring to the special, not the special purpose financial statement. We are referring to the general purpose financial statement. So you are clear on that. I am not going to go through one by one on going concern in the PowerPoint. So already I discussed with you. I don't want to repeat what is in the PowerPoint presentation. Already I discussed those things 2-3 times with you. As we discussed, the auditor's responsibility is to obtain sufficient appropriate audit evidence about the appropriateness of management use of the going concern assumption. With the material uncertainty is there or not. As we discussed, so you will find financial indicators, operating indicators and other indicators. These are some of the financial indicators already I discussed. As we discussed, management should assess, right, the appropriateness of the going concern assumption. So then, as we discussed, you want to collect the audit evidence as to make sure whether the business is having a going concern or not. That's why I discussed with you, right? So you want to evaluate management's plan for future actions in relation to the going concern assessment, right? Cash flow forecast, profitability forecast, or whatever the documents you can look into regarding going concern to make sure the going concern on the business, right? So that type of additional audit procedures you can look into. We discussed already those things. Please go through with this. So this is everything what I have discussed with you, nothing else. Right. So far I have discussed with you. Any comments? Are you okay? Any comments? You are physically, actively online or pretending as online? Some are actively online. Okay. Any issues? Okay. Yes. No issues. Are you clear? Yes. Right. Right. Now the important point is there. Actually, that will be discussed. Clear? Right. Okay. Thanks. Right. Now the important point is there. What is the important point is management has prepared the financial statements by making the assumption that the business is having the going concern. But as the auditors, we have the reasonable or the material or the significant doubt in our mind whether this business is having a going concern or not. Now management is making the assumption that the business is having a going concern. As the auditors, we have a reasonable doubt in our mind whether that business is having a going concern or not. We have a doubt. We can't say this business, as the auditors, we can't say this business will be collapsed this month or this year. We can't say like that, but by collecting our audit evidences, we have a reasonable doubt, because this is all about the future, right? So therefore, we have a reasonable doubt. Under that type of circumstance, what should do, right? So practically what happened is, you as the auditors ask the management to make a note on, so the business is having this much of loss. As a result of that, this will be the negative net assets of the business. I give the simple example, right? So you put that note. So you ask the management to put that note in their disclosures as a note. So then what you can do is, as the auditors, without change in your audit opinion, while you are referring to the audited financial statements, you have to pay your attention on this special matter, right? So that is what is called going concern, emphasis of matter paragraph. That is only emphasis of matter, no change in the audit opinion. So the simple idea is, while you are making your audit, while you are referring to the audited financial statements, so this type of issue is there, you should look into that as well when you are making your decisions. So while you are referring to the financial statements, so whatever the audited financial statements, please look into that as well. Please look into that as well. That is the simple idea on emphasis of matter. Make sure that there is no modification in your audit opinion. That is unmodified opinion. So you will discuss the audit opinion and everything with Mr. Sanjay Bandara. So he'll be taking those things. So then this is SLUS 706. This will relate into the emphasis of matter paragraph, right? So there is a separate standard on that. So with that, you will discuss in detail how do you look into, how do you incorporate, going concern issue, right, in your audit report. I just give the simple idea on that, how to incorporate that. So that will be discussed with SLAUS 706 with the other lecturer, right? So the remaining reporting part, that will be discussed with SLAUS 706 on going concern, right? So I don't want to discuss that part at this moment, because that will be discussed with going concern, what do you call that, SLUS 706 emphasis of matter paragraph and other matter paragraph standard, auditing standard, and SLUS 705 modification to the audit report, SLUS 700 the original audit report in the independent auditors report. So that will be discussed next couple of weeks, right? So rest of the things no need to discuss, that is the reporting part. So that will be discussed with that. Clear? Everything is on that, right? So that will be discussed with that. If I take this now, so then you will be in trouble, because that will be discussed separately. So I mean, at this moment you should understand, so what is going concern, what is the implication of going concern for the management, what is the implication for the auditor, what's the implication of the going concern for the users of the financial statements, how do you collect the audit evidences as the auditor, right? So then how do you collect the audit evidences, and then so if you have a reasonable doubt on the going concern assumption, so what's your reporting part on that? So that will be a blank point, that will be discussed with SLUS 706 and 705, right? So that is what you want to know under the going concern. Clear? Any comments? Yes? So if you are clear on this, we can move on to the next. We have a question on this case study, going concern. Are you clear on this? Please download the case study in the LMS on going concern and make your attempt on that. So we'll be given the going concern case study. Please look into that. So this is the case study. I think you can see, right? You can see. Please look into that. So I will give 5 minutes. Come up with your answer, right? So what is expected is identify and explain the matters which cast doubt on the going concern status of the whatever the company. Explain the audit evidences you should expect to find in your file review in respect of the cash flow forecast. So basically, so what are the that matters that may create a doubt in your mind on going concern assumption, and how do you collect the audit evidences to make sure the cash flow forecast on that particular concern. So that is what is expected from you. Please look into that and come up with your comments. So I'll give 10 minutes with that. So then once we complete that, we can move on to the other two standards I want to discuss with you. So before that, now 10:50. So we'll start by 11 with by 10 minutes time. So please during that time come up with the answer on that as well. So after that I will discuss the answer. Please look into that and apply your knowledge gathered at this moment on going concern, and make your comments on this. So make sure you will get this type of questions in your paper. So therefore be ready on working on these questions. So that will be practiced through working these questions and developing your answers. Otherwise you will be in trouble in the final exam. Please look into that. Any comments? Any comments? Please look into this. Right? Are you clear? So what's your answer on this? Yes. What are the circumstances? What are the the situations you find a reasonable doubt in your mind on going concern of that particular business? Can you hear? Yes. Any circumstances? So we will find a lot of indications, right? So declining in the profitability and poor liquidity, right? So development of new product is further, reduction in cash. So success of new product is not guaranteed. So we don't know whether that will be successful or not. So these are some of the indications, right? So regarding the procedures on cash flow forecast, so you can have a lot of procedures on that, right? So the answer is given. You can look into that. The objective is to apply the knowledge what we have gathered to that particular case study. Yes, any comments? Can you hear? Can you hear and can you see? Can you hear? Yes or no? Right, thanks. So you get the answers. What are the answers you get? Is it the same answers? Right. So are you clear on that how to develop your answers on these matters? So please look into that comprehensive answers as well. I have uploaded to the LMS the answer, you can refer to that. But again, what is important is, so how to develop your thinking on that. Answer is already provided in the LMS, so you can download that. Uh, but the important thing is to develop the answers by yourself. That is what is very much important. So already given in the answer is in the LMS, right? You can look into that. No, it's there. You can see the answer. Going concern case. It's there. You now look into that. Still not. Still not. It's there, right? Okay. Right. So with that, I'll be moving to the another uh, standard, which is again important and very short standard. And again, you have discussed this, right? SLS 560 subsequent events. So what do you mean by subsequent events? So there is a account standard as well on that. Events after the reporting period, right? Events after the reporting period. You have the LKS on that. So that is again related to that. Subsequent events. What would be the subsequent? What do you mean by subsequent events? So can you type your answer? What do you mean by subsequent events? Can you type? What do you mean by subsequent events? Yes. Any events occur after the reporting period? Yes. Okay. Any events occur after the reporting period? Okay. After the reporting period, then so until which time period? Subsequent events will be counting. Yes, after the reporting period, before or no before the auditor's report date, or no before the auditor's report date. Right. So it is the period starting from the let's say 31st March. Like I will take a PowerPoint and explain this. So our financial period is, let's say, Financial period is 31st March 2015 to 31st March 2016. This is our financial period. Okay. This is financial year, right? What is subsequent period? Subsequent period is the period that is starting from that is starting from 1st April 2016 to which date? Audit report date. What is audit report date? What is audit report date? Audit report date should be the date on O after the financial statements signed by the whom? Management. Audit report date should be the date on or after the date the financial statement signed by the management. So now the concern is, can you put the audit report date as the earlier date before signing the financial statements? Let's say financial management signed the financial statements on signed the financial statements '30th June 2016. They have prepared the financial statements and they put the signature on the financial statements. They have prepared and make the fair presentation on those on 30th June 2016. Now tell me, what would be the audit report date? What would be the audit report date for this particular example? It should be this date or later date. Not earlier. Not earlier date. Not earlier date. You understand? So therefore subsequent period is what? In this particular example, audit report date is the 30th June 2016. In practice, I just want to tell that, emphasize that matter. So what happened is, audit report date is the date when the management signed the accounts, when the management signed the financial statements. The same date basically put as the same date will put as the audit report date. Right? Don't put the earlier date. So that means that you are getting the responsibility as the auditors on the financial statement prepared by the management. So that is fundamental error. So therefore, so practically what happened is, so management sign date on accounts will be the date for the auditor's report date as well. Right? So that is the normal practice. So some practice is there. So audit report date will be the date. Some are doing this, that as aspect as well. Field work completed date on that particular audit. Field work in the sense, you know, that you do the audit in the client base. So that I mean the final date of that, you know, the client base visiting or whatever that, you know, field work done on that particular date. Some are put in, but it's all right. But most probably that's very much important. I mean practically most of the cases. So the audit report date, also the date the management signed the accounts or the financial statements, that date will be considered as the audit report date. So therefore subsequent period means, so immediately after the reporting period, that is as per this example 1st April 2016 to audit report date as per this example. So that is basically, if you go with the practice, that will be the 30th June 2016. Right? That is a subsequent period. Are you clear on that? Now the concern is, during this period 1st April 2016 to 30th June 2016, any events happening in the business, any events and conditions that are happening in the business should be incorporated to the previous financial period, that is 1st April 2015 to 31st March 2016. That is the concern. Do you want to look into that? Right? That's your comment. Do you want to look into the subsequent events, which are, now you know what is a subsequent period. During that period the events and conditions are happening. So do we want to consider on those when we are making the audited financial statement? So when we are doing the audit for that particular period, and is there a responsibility to incorporate those events and conditions to the financial statements that are preparing or that have been prepared for the 1st April 2015 to 31st March 2016? Do you want to look into that? Yes or no? What's your idea? What's your comment? Anything to make your comment? Nobody. The idea is you want to look into, right? So for the subsequent events which may have an impact to the financial statements for the period of 1st April 2015 to 31st March 2016. If there is an impact to the financial statements for that particular period, so then you have to incorporate that into the preceding year financial statements. Can I give some, shall I give some examples on that? Let's say like this. So during the month of April, you care to know that 2 million debtor is was dead. You are not in a position to get the money back from that particular customer. Is it a subsequent event or not? Subsequent event. That has happened on that you came to know on month of April. Now you know that. Now what's the point of keeping the 2 million debtor in 31st March 2016 debtor list as debtors? Now tell me, do you want to adjust that? Do you want to remove that 2 million from your debtors list or from your debtors ledger? Yes or no? To give the better picture on the financial statements. Yes or no? Yes. Yes, we want to adjust. Right? We want to adjust. Yes. So that those are the subsequent events and conditions. So therefore, LKS on events after the reporting period tells you two different types of events and conditions. Right? Two types of subsequent events. Those that provide evidence of conditions that existed at the date of the financial statement, and the second category is those that provide evidence of conditions that arose after the date of the financial statements. Right? So the first scenario is what? So this is the classification on, in simple terms, adjusting events and non-adjusting events. Those that provide evidence of conditions that existed at the date of the financial statement, and those that provide evidence of conditions that arose after the date of the financial statements. Right? So therefore, you want to consider whether we want to adjust in the financial statements any events that are happening subsequent to the financial period, right? Or you want to make a disclosure on that if it is material in the financial statements. Right? So do it need to consider the materiality? Yes, we'll look into that as well. Right? So we'll look into your comment. Now, irrespective of the materiality, if it is a adjusting event, you should adjust that. If it is no need to adjust that, only disclosure is enough. So if it is material event, you want to make the disclosure. Right? If you feel that it is, any event conditions that change the statement of financial position, or that change the conditions of the financial statements for that particular period, you have to make the adjustment, irrespective of the materiality. Right? So let's say another example I will tell you. So there was a flood on 2nd of April. Now tell me whether we want to adjust that. So due to the flood, your inventory has been damaged, 5 million damage. Now on 2nd of April 2016. 2nd of April. Now what we should do? Do you want to adjust or not? What's your idea? What's your comment? Now 31st March, no issue. The stocks are in the good condition. So therefore there is no impact to 31st March stocks. So don't need to adjust. But the point is, this situation is material. If it is material to the financial statements, you should make a disclosure in your report, in your notes. So there was a flood in this date. So as a result of that, this much of stocks were damaged. So that can be disclosed as a note, in a note. So if it is material, if it is not material to the financial statements, no need to disclose. So that is the rule, or that is the the practice on subsequent events, right? Any event that change the conditions for the existence of balances on the balance sheet date, then what you have to do is you have to adjust that. So we can't list down these are the events and conditions that are happening like that, right? Any conditions that may subsequent to the period that may give some informations that do not have an impact to change the financial statement figures, right? So then no need to adjust, but if it is material, you can make a disclosure in the financial statements as a note. That is the treatment which have been discussed in LKs on subsequent events after the reporting period, right? So that is what you want to know. So as the auditors, you have to look into that. So whether the management has considered on the subsequent events that have been properly incorporated to the set of financial statements. So that should be checked by collecting the audit evidences to make sure that subsequent events have been incorporated as and when required as per LKS on the events after the reporting period. That's the auditor's requirement, that's the auditor's responsibility on subsequent events. Are you clear? Any comments? I just want to highlight another point. So now that this is audit report date, so there is another reporting date, date is important, date is there. Financial statements issuing date. Financial statements issuing date is 30th June 2016, right? So now very specifically LKs on events after the reporting period, as well as the subsequent event auditing standard tells you subsequent period should be the date from the subsequent the next financial period starting date and the audit report date, that is the period. So financial statement issuing date is somewhere else, beyond that particular period. Therefore it is not coming under the auditor's responsibility. But still, so therefore no issue with the auditor in regarding that date. The auditor's responsibility will be ended up with audit report date, that is 30th June 2016 on as per this particular example. But still there is another circumstance that financial statements are issuing on 30th June. So until such time the things that are happening in the business, auditor is having no responsibility on that. But still you can, if there is something material, you can discuss with the management and what do they want to do, but no responsibility on that for the auditor. So this is very unlikely, so that won't happen, right? So but the standard is talking about that. Just know that you do not have the responsibility on that particular period, because your responsibility will be ended up with 30th June 2016 as per this example. Your subsequent period will be ended on that date, right? So that is what standard talks about. Even after another scenario is there, financial statements have been issued to the public and to the stakeholders. So then what do they supposed to do? Any issues come across after that? So no responsibility again on that as well for the auditor, right? Right. This is what we discuss. The auditor shall perform audit procedures designed to obtain sufficient appropriate audit evidence that all events occurring between the date of the financial statement and the date of the auditor's report date that require adjustment or disclosure in the financial statements have been identified. Very important. This is what exactly we have discussed. Whether you want to have adjustment or disclosure, right? Adjustment is required when and where the change the financial statements because of that subsequent event. That's why I take the example on bankruptcy or any that information you came to know about your non-payment from your customers. Let's say another example. There is a case against your company, your client. So then now 30th April you came to know that 30th April 2016 you came to know that the company has to pay 2 million as the compensation for one of the employee on that particular case. Then do you want to make a provision on that in the financial statements? Yes or no? For 2 million for the year ended 31st March 2016? Yes or no? You want to make a provision in the financial statements. Why? If you know that information on 31st March 2016, what do you supposed to do? You will make the adjustment. You want to do that, right? Even that is came to know in the subsequent to the financial period, but that is if you know that information on 31st March 2016, you will make the adjustment. Only the point here is you came to know that information after the financial period. If you don't adjust your financial statements, what happens is your financial statements don't give the real picture. Don't allow that to happen, right? It's the management responsibility to make the adjustment, but again the auditor's responsibility is to collect sufficient and appropriate audit evidence that all events occurring between the date of the financial statement and the date of the auditor's report that require adjustments or disclosure in the financial statements have been identified. That is very basically identify the subsequent events and make sure so that all the adjustments or disclosures as and where appropriate have done in the set of financial statements to make sure that you should collect sufficient and appropriate audit evidences. So this is the core concept on subsequent events. Others already we discussed. So you can have other audit procedures on that, obtaining understanding of entities procedures on subsequent events, inquire from the management, you can read the minutes, read the subsequent interim financial statements, you can get the written representation on subsequent events from the management, right? So as we discussed, so facts known to the auditor after the date of the auditor's report date, before the date of the financial statements are issued. Already I discussed this circumstance. Very clear that the auditor has no obligation to perform any procedures regarding the financial statements after the date of the auditor's report. So that's why I told you the auditor's responsibility on subsequent events are being restricted to the date on the audit report date. After that, no responsibility. But you can discuss. So what do they supposed to do after this, even with the management? So it's up to your professional, that capacity. You can discuss with the management, but no responsibility from your side. Yes, that is what given here. So the final scenario, that facts become known to the auditor after financial statements have been issued. Again, no responsibility, but you can discuss with the management what do they supposed to do. So it's all about professional work you're supposed to do, but legally no responsibility for the auditor. This is all about subsequent events. Very important short standard and again important standard on subsequent events. I think you are clear. And again you have discussed LKS on events after the reporting period. By keeping that knowledge, this should be clear. Any comments you can ask? Yes, are you okay? Any comments? right? Do you have any comments? No? Now this is what I want to discuss about the subsequent events, right? So from next week onwards, you will be having that other lecturer, so then you can discuss those things, but give the maximum support. By I hope that you will have the the basic knowledge on that, so on auditing. So with that, the give the maximum support to continue the lectures, right? So I mean, from giving the answers and all that, having a close what do you call that, rapport with the lecturer. So basically I discussed with you so far. So introduction to the auditing and terms of audit engagement, audit planning, right? Assessing the risk of material misstatements, audit materiality, analytical procedures, then consideration of laws and regulations, the auditor's response to assess risk, and again fraud and errors, using the work of internal auditors, and audit evidences, right? And other audit procedures you can follow to collect the audit evidences. And then finally today we discuss going concern and subsequent events. So only one standard is, so far I have not discussed, only very few, very short standard, again audit documentation, right? So basically what is audit documentation is, so nothing else, you should document everything properly, so to conclude or to come up with your audit opinion. For that you should have the proper documentation, maybe in written form or hard copy form or e-form. So whatever the form, it's not an issue. So the important point is you should have the proper documentation. How do you come up with the opinion, right? So that is all about the documentation. So I will be discussing that. It won't take much time. So the others, as per the course outline I have discussed, so it won't be an issue. So I will be discussing that once I get the lectures again, right? So that's what I want to discuss with this. So any comments? So before winding up our session, right? Any comments? Yes. So with that, then we'll stop the discussion. So then you will meet as I discussed, with that the other lecturer. So from next week onwards for next 5 weeks. So please get the maximum, right? So through the subject, and improve your knowledge, technical and soft skills on the subject as much as possible, right? So everything we are doing to develop you, so therefore get the maximum out of that. Thank you very much. So then wishing you very best for the coming year from tomorrow onwards, 2017. So wish you prosperous and very happy new year 2017. Thank you very much. We'll see you on after new year, so next after a couple of sessions, right? Okay then, right? Thanks. Okay.